All right, well, joining me on the line today is our good friend, longtime sponsor, and precious metals advisor, Tom Cloud, here to talk about precious metals. Tom, great to have you on the line today. Thanks for joining me.
Always a pleasure, Jerry. I love coming on the show.
Oh, I know our folks love hearing your insights. You know, for those of you who happen to not be familiar with Tom, I should give him a bit more of an introduction. He's been in the business of precious metals, tracking precious metals prices, advising people and clients, and of course, selling gold and silver for more than 40 years. So, Tom, you've been through many cycles. You've seen a whole lot. And I'm looking here at all the different charts of the precious metals. I'm looking at gold. Gold, even though it's pulled back from its recent $2,000 high, we're still sitting above the 2011 peak that we had hit, way back then. So we're still doing fairly well from a longer term perspective. When you look at platinum, platinum is down from that 2011 or 2008 peak, I should say, and even the 2011 peak. Silver's down from its 2011 peak as well. Palladium is still at these multi-year highs, just below 3,000. So we've seen some, gold has really held up well here. Some people are looking at silver, wondering when it's going to break above 30, and some people are looking at platinum, seeing that it is historically depressed, but it's certainly off of those $800 lows that we had seen back in, I guess it even got down below, during the crash of 2020, it got down well below even $600 briefly, but 800 has been that key area of support for platinum. So give us a broad overview of what's happening in the precious metal space, what investors are asking you about, and what your just general take is on what's going on.
Well, I think we have to start with what we mentioned last time about Basel III. I told everybody I talked to last week, I said, when you turn your computers on July 5th, you're going to see gold a lot higher because that's the mandate that they can now buy gold, the central banks of the world, and count it as a tier one investment. Right now, Jerry, the only thing you got is a tier one out there is gold and government securities. And we'll talk about that a little later. But we just kind of saw yesterday just an explosion right out of the gates in the Far East on central banks buying gold, and we're going to see that as now underpins the gold market. Gold is really money. I mean, it's money today. It's just not tied to a fiat currency, but you see central banks buying it, knowing they can carry it, and whatever happens, whether we go to, a gold-backed currency or what, we're already got a gold currency with the central banks buying it. This thing is not, it's not going to slow down till we get back to 2000. Then above that 2062, we think it breaks out to 2,500, maybe in the next year and a half, maybe 2 years. I'm not sure, but you're going to see the banks, you're going to see the big investors. I was on the phone yesterday at a conference call to a guy that's got $11.7 million in metals, and he went, and even his broker told him, I don't feel good about, equities. Not that I'm expecting to go down right away, but he said, I feel incredibly good about beefing up in metals, and especially gold. So you've got an older client preserving wealth, wants to have something that's been around since biblical times and will be around forever. I mean, it's always going to be tied because of its acceptance in the world market. So I don't see anything except good news for gold, and just to keep buying it. Premiums are very reasonable when you look at it. The LBMA, London Bullion Market Association brands, is what we're going for, because that's what the people that are leveraging gold in the futures market have to buy. They're buying 1 ounce, 10 ounce, and kilo, which are 32.15-ounce gold bars. And because when these J.P. Morgans and Goldman Sachs buy more gold to leverage more gold, this is what they have to buy. So there's a constant market, plus the markups are tighter with those COMEX bars. And that's only, we're going to continue to see that. Silver, as you and I talked about earlier, the Indian problem over there, last year we were seeing record imports of 100 to 150 tons a month in silver. They'd always been a gold-loving country and saving their wealth in gold. And then the younger generation came and they got a little more aggressive, saw the potential for silver, and they helped drive silver up from the mid-teens into the low 20s. But now this COVID situation in India, we've only seen an average of 32 tons a month going into India for silver, and yet the price has still come up. So you can look at it either way. You can say, well, it's getting ready to explode back up to bigger tonnage being bought. And when it does, with what's already going on with the investor market in the U.S., you're going to see silver take out that 30 number that we've been close to a couple times. But you got to remember, Jim, when COVID started, we were back there at $13, $14, and then we had that 92% up in 2020, 92% up, but it fell off at the end to have about a 60% up year. So we've got to realize that silver is still has the best leverage. There are things out there that tried to push it down, didn't push it down a little bit from 28.50 to 26 something where it is right now. So I like the cost average on silver. You just keep buying it when you have, you buy 20 coins or a 100-ounce COMEX bar, LBMA or something. You just want to keep buying silver because I really don't know anybody, even my stoutest clients and friends that are in the equity business, don't think silver's going to go to 50, at least return to its all-time high for the third time. And I think it's going to go way beyond that. But anyway, so silver, watch it to pick up. Inflation is picking up, and that's always been great for the little guy that can buy a little silver that can't afford to buy gold. I think the inflation investors are going to come back in that we saw back in the Jimmy Carter and Gerald Ford era back in the 1970s and 80s when gold and silver just started trading. So we're really excited about silver and still feel you need to have a part of your assets and then part of your hard assets in silver. I'm still a huge bull on platinum. As Jerry said, I gave two buy signals on this show, one at 740, I think it was, and one about 860. Here it is, a little over 1,100, and it's had about a $200 pullback. It's still, remember, it's nearly 50 times more rare than gold, and gold will pull it up during all this Basel III that's here to stay. And if you have time, Google Basel III and take a read. It was all created back in, during the financial crisis in 07, 08, and 09, where these banks would never fail again. And when you think about it, they were telling you then, fiat currency can fail, but gold can't. We're going to allow it to be the stabilizer because everybody believes in it. But the amount and demand of gold being bought right now by banks, and we sit on the sidelines, the average investor, he still needs to whatever percentage he allocates to precious metals. Let's just say for argumentative purposes 15%. So maybe it was 10% is net worth in gold and 5% in silver, maybe 2% in platinum. Palladium I'm not in right now. We gave a buy signal at 300. I admittedly got out too early at 1,800 and something. It was not a great call, but made 6 times our money, so you can never complain about something like that. But the world's changing, folks, and it's a lot of stuff's going to be coming your way with opportunities as the world moves toward hard assets, and we see all these, more and more people getting comfortable with cryptos, and you look at NFTs, all the different things out there. But the good thing we have is just having that metal, and whether you take delivery of it or you store it in one of our facilities, that we've got you the lowest storage rate in the world. People are still shocked at how low the rate is, but we still have that going as we have since 2015 to buyers. And just, give us a call. And Dan Scoggins, who's has been promoted to general manager. I'm still working, but I'm not working the hours that I was working. But Dan's been with me 25 years, and it's his turn to take over. And y'all met him recently on one of Jerry's shows we did with Zoom, and we're going to do that some more where y'all get to know Dan better. But there's not a finer person, a more studious person than Dan. But he can be reached at 800-247-2812. That's 800-247-2812. And let me say one other thing, Jerry, before you have the other question. The IRAs right now, if you're coming, you're retiring, you're rolling out, 401ks, we advise you to get 2 self-directed IRAs. One's for your equities and one for your precious metals. So when you call Dan, you can have them rolled out in the 401k. We do it every week, and that's another great way to invest in the precious metals if you don't have the funds laying around on your personal side, but have them on your retirement side. So you can do that. We can be your everything except custodian. We can be your broker and help you decide what you want to buy and do the order. But we'll introduce you to a custodian. They're the ones that tell you when you get to 70.5 how much you have to sell, and they send you a quarterly report on the value and all that. So anyway, just call Dan on that also, and anything you need me for, Dan will give me your number, and I'll get in touch with you.
Yeah, well, I think that you've really covered a whole lot. I mean, you've provided a really nice overview. I want to remind listeners that when they call for pricing on any of these metals, be sure to mention Follow the Money, because Tom has a gracious offer of providing free shipping and insurance on every order whenever you bring up Follow the Money or Jerry Robinson, Follow the Money Radio. So be sure to do that. And Tom, what would you say right now to the person who's listening and saying, yeah, I do want to give them a call. I do need to get some physical metal. You had mentioned silver being kind of a good place to get started. Would you just provide real briefly any kind of guidance you would have for that new investor who wants to get into the space? Should they buy bars? Should they buy coins? Should they pay the extra for the coins, or can they get away with spending less on the premium and getting the rounds? Just a little bit of advice and guidance for the new investor on maybe how to get started.
Well, anybody can afford a 100-ounce silver bar that can be COMEX or LBMA brands. You don't have $3,000 or whatever it is, right around that. That would be my preference. But certainly we have a 20 coin minimum. So, if you get started there at $600 or $700, depending on which coin, and as most of you know, coins, 100 coins have a bigger premium than one 100-ounce silver bar. But for those that can't put 3,000 in right away, buy that. But unusual, we love the silver rounds and low premiums, but now the premiums on those, Jerry, are up. And in some case, when you look at what you're paying and what you can sell it for the next day if the market didn't move, we're now seeing some of these sovereign coins come in, the English coin and the Philharmonic and the Kangaroo and the Krugerrand are all sovereign coins made by a country that are worth a little extra premium, because with the demand for silver, there's not as big a difference between the silver rounds and the sovereign coins. So right now, I'm advising people to buy the sovereign coins. I'm not paying the Silver Eagle premium, but we have some people that will buy it because America makes it, which is fine. But just remember, you're giving away some you'll never get back, no matter how high it goes. But the other 4 I mentioned are great buys right now, and quite frankly, I'd buy them rather than the silver rounds. Now, that can change in a week or two when the supply runs back up, because the people that produce silver rounds are always buying scrap silver and turn it into investment silver, and when they get large quantities, they drop the premium. So that's one thing to ask Dan about when you call. But right this minute, I would go one of the 4 sovereign coins, or if you can afford $3,000 approximately, I would do the 100-ounce silver bar.
Thanks again, Tom, for all of your insights. I really do appreciate you.
All right, Jerry. Glad to be with you.